हॅलो. नमस्कार मित्र. इयत्ता 12वी सेक्टरल प्रॅक्टिस या विषयाच्या या व्हिडिओ लेक्चरमध्ये तुम्हा सर्वांचं हार्दिक स्वागत. बिफोर स्टार्टिंग दिस व्हिडिओ लेक्चर I just revised what we studied in previous video lectures. The focus of previous video lecture is mainly on different sources of corporate finance. There are two sources, own sources and borrowed sources. Then in own sources we completed shares, types of shares, features of equity shares, features of preference shares, and the next thing of own sources, that is retained earnings. So from this video lecture we cover what is meant by retained earnings, what are the determinants of retained earnings, the concept of retained earnings, definitions of retained earnings, advantages of retained earnings, and disadvantages of retained earnings. So in this video lecture I am trying to cover only meaning, definition and determinants of retained earnings. So retained earnings a newly established company has only external source of finance. That is, a newly established company can collect capital, raise finance from shares, debentures, bonds, deposits, loans. But a well-established existing company can generate finance through its internal sources. Retained earnings is one of the internal source of finance. A company every year earns profit by its transactions. The whole profit is not distributed into owners as a dividend. Then what is meant by dividend? Dividend is the portion of profit which is distributed among the shareholders in respect of their shareholdings in the company. After finalizing the balance sheet, company knows the amount of profit or how much amount the company get profit is shown on the balance sheet side. Is the on balance sheet side is in the balance sheet of the company. So from this profit, after payment of all types of taxes, payment of debt capital, interest of debt capital, payment of dividend to equity and preference share, certain amount is remain with the company, certain amount is retained with the company. Some part of profit is remain retained with the company because company does not distribute each and every rupee in the shareholder for expansion purpose, for modernization purpose, for renovation purpose, to implement new policies, plans, strategies in future. Company kept aside certain amount with the company known as a retained earnings, or for as a provision for future. Company kept certain amount known as a reserve fund. This saving is known as a retained earnings. The next definitions of Retained earnings, the process of accumulating, accumulating, integrating profits from each and every year and their proper utilization through proper channel is known as retained earnings. In other words, it is the portion of profit which is not distributed among the shareholders but remain and reinvested by following proper procedure in the business is known as retained earnings. The next definition is which is a more comprehensive definition of retained earnings. Retained earning means profit generated by a company that is not distributed to stockholder or shareholder as a dividend but reinvested in the business or kept aside as a reserve for specific objectives such as to pay debt or to buy certain capital assets. After making analysis of these three definitions, we say that retained earning as an internal source of finance. It is a profit. It is a part of profit which is not distributed among equity shareholders as a dividend. The policy of using such retained profit in the business is known as a self-financing or plugging back of profit. The management can convert this retained profit into permanent capital. Then source of permanent capital is only equity shares. Convert this retained profit into permanent capital by converting this capital into equity shares through the process of capitalization of profit. Then what is meant by capitalization of profit? That is, reserve fund is used in the business as a capital, known as a capitalization of profit, by issuing bonus share. Then what is meant by bonus share? The concept of bonus share is not new for us, because in last video lecture we discussed this concept many times. Bonus share, the existing equity shareholder company issue to capitalize its profit shares to the existing equity shareholder as a gift, as a free of cost, known as a bonus share. Retained earning is its cheapest and simplest source of finance. Then why it is cheapest? Because company does not require to pay any amount, any cost for raising capital as a retained earnings. That's why it is simplest and cheapest source of finance. The next concept is determinants of retained earnings. Then what is meant by determinants? The amount of retained earnings is depend upon certain things. These things decides the amount of retained earnings. These things are known as determinants of retained earnings. First point, total earnings of the company. Company earns sufficient profit that time saves profit as earnings. As per economist Lord John Maynard Keynes says that one of the principle, larger the earnings, larger is the saving, or vice versa. It means if company earns more profit, that time company pays all expenditure and maximize and maintain maximum reserve. And in another case, if company does not have ample profit, then the impact of all these things is directly on the savings of the company. So company cannot maintain maximum reserve. So earnings of the company is one of the determinant of retained earnings. Next, taxation policy. Tax is the compulsory payment made by companies to the government, because one of the source of revenue income to the government is tax, or through taxation government get revenue. So government impose various taxes on the business. Tax minimize the savings of the company. If tax rates are more, then less retained earnings of the company. If tax rates are less, then more amount is in the form of retained earnings. Next, dividend policy. Basically, what is meant by dividend policy? Dividend policy means the policy of the board of directors in respect of declaration of dividend and distribution of profit. The dividend policy is affected by many factors. There are two types of dividend policies: conservative dividend policy and liberal dividend policy. Then what is meant by conservative dividend policy? In conservative dividend policy, the more amount is kept aside as a provision for future and less amount is distributed as dividend. And in liberal policy, more amount is distributed as a dividend out of profit and less amount is kept aside as a provision for future. So in conservative policy, dividend is less, retained earnings are more, and in liberal policy, dividend are more and retained earnings are less. Last determinant of retained earning, that is government control. Government is a regulatory controlling body for the economic system of the nation. Government control economic system by making various laws, rules, regulations, guidelines which must follow by the business organizations. So company business must make adjustment with the change in government policy. Before 1991, what happened? There is excessive control on the government. That's why there is expenditure. Sometimes expenditure is more. So impact of this thing, that is reduction in the retained earnings. But in 2020, government control is too much less. The government control decrease expenditure today and increase the profit of the company. As discussed earlier, larger the profit, larger is the saving, larger the earning, larger is the saving. If larger is the profit, therefore increase in retained earnings of the organizations, or retained earnings also increases. For today, I stop here. After watching this video, you have to write down short note on retained earnings. While writing short note, you have to write down meaning, definition of retained earnings, introduction, and determinants of retained earning with advantages and disadvantages of retained earnings for 4 marks. This is an important question as far as our HSC exam is concerned. If you find this video is helpful to you for your examination, then please subscribe my channel Sridesh 999. Thanks for watching.